case of a reversal for emerging markets at large in Asia and Pacific. Do you believe that what started off last week, and I know it's an ongoing problem in Turkey, but it kind of escalated, do you think that can snowball into the broader trade across emerging markets turning negative?
Well, we've just done our third round of target price downgrades this year. So we did a round of downgrades in February and June and again last week. So our new target for the EM index is 945. So that's about 8% below current levels. We've taken our earnings forecasts down again and also our multiple forecasts down. We would highlight the breakout to the upside in the dollar on firming U.S. growth and Fed expectations and the downside move we're having in the renminbi and other EMFX currencies on falling Chinese rates. I think the decline in the copper price is important and the weakness in global PMIs. We've also had further underperformance of Korea, which is typically what you get in a bear market in the EM. The dispute between Turkey and the US is causing associated weakness in EM currencies with large external financing needs, and about 30% of EM has reserve coverage that is less than 2 years of financing needs. And we're having quite large outflows from Asia and EM dedicated equity funds. Only, however, about 20% of the money that came in last year has left this year. So to that extent, it's not yet a sort of fully mature outflow period. We've had downgrades by our tech team of their outlook for the semiconductor industry, which is a key early mid-cycle cyclical that's indicating problems to come, and important earnings misses at the stock level in recent announcements. So I think all told, we suspect that there'll be further downside from here in our markets.
What's the view in India then? Because irrespective of the currency weakness on account of dollar strength and other emerging market currency weakness, we're running that fear of a current account deficit ballooning. This time around it came in at a 5-year high. But still, the fact of the matter is that India continues to see inflows even from FIIs. And if I just look at the weekly change itself, as opposed to China, Hong Kong, Singapore, South Korea, all giving you negative returns, India has managed to outperform in the green.
Yeah, so we do believe in the cyclical recovery story in India for now, and we have been trying to play that in our stock focus list, and we are overweight India, so it's one of our overweights, whereas we're underweight Korea that you just mentioned. I do think, though, you will have to monitor the current account quite carefully because India is one of those countries that does not have such strong reserve coverage as, for example, a market like Taiwan or Thailand or China. And so we have to be careful as to whether the current account becomes a constraint. India's already had to hike rates twice into what is an improving domestic economy. And for the time being, we are overweight, but it's not without its risks.
Jonathan, to your mind, what are the chances that the earnings recovery cycle, which in India has been uneven, now is real, and both demand and earnings recovery could surprise us?
Yeah, we do think that, at least for now, because India had this very prolonged period of weak economic growth due to GST, reform, demonetization, and fiscal tightening. And now there's a lot of pent-up demand in the system that is coming through, which is good. And it is a very different phase of the business cycle from, for example, China, which has been aggressively tightening until very recently and where growth has been decelerating rapidly. India is also not that exposed to U.S. trade and tariff protectionism compared to the countries of North Asia. So there are a number of positives, which is why we're overweight India.
Last time when I interacted with you, you were of the view that all markets will fall and India will also fall, but it will fall less. The fall has happened. Do you think now Indian markets can outperform in a falling environment, or the story will remain the same, which is that everything will fall and India will continue to fall less?
Yeah, so that is outperformance in a falling market, and it is doing exactly that because of the things we've talked about on this interview. Obviously, the dollar performance is not so strong, but it is outperforming particularly these markets in North Asia that are more trade dependent, trade sensitive. So yes, it's been a good year for India, and we've been overweight all year. And though the absolute performance isn't good, it's been a very good relative performance.
Jonathan, just one final word. I mean, we've been talking about this currency weakness across the globe. How much of that has to do with what happened in Turkey, which is largely a local problem, versus the dollar's strength in lieu of rising interest rates, and how much of that would be a pressure for emerging market flows?
So emerging currencies have weakened right from the start of the year. It's really to do with the divergence in U.S. monetary and fiscal policy versus the rest of the world in the context of U.S. growth continually surprising on the upside and elsewhere in the world surprising on the downside. So I think these latest issues in relation to Turkey is not the prime driver of why EM currencies have been weak this year.